Good afternoon, everyone, and welcome to today's webinar about completing customs declarations for trade with the EU, brought to you by the Institute of Export and International Trade. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon. And thank you all for joining us today. This is clearly a very important topic for UK traders, and as we've already got several hundred of you on the call already. So a warm welcome to all of you today. Move on to the next slide, please. So we have a fantastic and a new speaker for the webinar program today in Aimee Maltman, who has recently joined the Institute this year. So hi Aimee, welcome aboard. How are you?
I will. Thank you very much. Glad to be here. How are you?
I am well, thank you, Aimee. Aimee is a customs and trade specialist with 10 plus years experience in the trade and has a lot of knowledge about things like Brexit, rules of origin and customs special procedures, among many other things, I am sure. And we also have Paul Woodward here today, another customs specialist from the IOE. Hi, Paul.
Hi, Will. How are you doing today?
Good, thanks, Paul. Good to have you here as well. Paul's going to be helping with a few of the questions and has also been supporting with the slides for today's presentation. So great to have Paul here as well. But before we hand over to Aimee, if we go into the next slide, we're going to be doing a few different polls today, just to get us a little bit of a sense about you, our audience. So the first poll, we are asking, how confident would you say at completing customs declarations? Our topic for today, of course, and that's a scale of 1 to 5, where 5 is very confident. Now, while you are answering that poll, you can contact me with any comments or questions you have using the question panel on the control window to the right-hand side of your screen. We hope to get to a number of your questions towards the end of the webinar and during a few of the polls, but please do bear in mind that we have already received a lot of questions today in advance and we'll be receiving plenty more during the webinar as well. If you don't get to your question, please do review some of our technical support helpline and training and consulting offerings, which we'll be talking about later in the webinar. Secondly, you will also be receiving access to today's slide pack and a recording of the webinar in a follow-up email we will be sending over the next day or so. If you don't get this, please feel free to contact admin@opentoexport.com and we can get those to you directly. But hopefully we will get all of our information to you very quickly afterwards. Anyway, I'm going to, if we can quickly close that poll and share the findings. So it's a mixed bunch, as well, it's not too much of a surprise. Declarations are a new thing for many companies in the UK trading with the EU. So 34%, a third of you are kind of in the middle, but probably some quick maths, about half of you are feeling not particularly confident and the rest of you feeling more confident. So Aimee, any surprises there with the results?
Not particularly well. I think given the climate, it's not surprising at all that people feel they need help. And that's what we will hopefully help with today during the content of the webinar. Absolutely.
So yeah, hopefully this will be a useful webinar to all of you on the call today, even those few 5% of you who are extremely confident, it seems. But anyway, if we close the poll, and I'd like to hand over to Aimee for the presentation. Over to you, Aimee.
Thanks, Will. Can you just confirm you can still see my screen?
Yes.
Yes, yeah. Great, awesome. Okay, so on the agenda today, we'll look a little bit at customs declarations and whether you need to complete them. We'll look at getting started completing declarations and the information required to complete a declaration. We'll look at checks and errors, and then we'll finish by looking at simplified declaration procedures. Okay. So what are customs declarations? A customs declaration indicates to a customs authority that you're moving goods across an international border. So put very simply, customs declarations involve submission of data to HMRC systems, and there are certain data elements which are mandatory, which we will cover in the webinar today. So if goods are coming into the country, an import declaration is made, and the import declaration will account for import duty for goods being placed into free circulation. And the amount of import duty will be determined by a number of that element's commodity codes and the customs value. And the import VAT will be payable on import as well, unless the importer is using the new postponed VAT accounting procedure, and we will talk about this today as well. So if goods are leaving a country, an export declaration is made, and this indicates to the customs which types of goods are being exported and to where, okay? And whether you need to complete a customs declaration depends on where in the UK they start or end their journey, okay? So the customs declaration gives the customs authority the ability to check that the correct procedures have been followed when goods are prohibited, restricted or controlled, and that's normally because those goods pose a threat to the country's security. So in summary, declarations gives the customs authority visibility of the goods that are moving in and out of the country, and that helps protect the country's economy, security and environment. Okay. So we'll look at who needs to complete customs declarations. So the UK Customs Authority have developed a new tool to help traders understand whether they need to complete declarations, and we'll send you a link to that following the webinar. As of the 1st of January, all goods moving between Great Britain and the 27 member states of the EU require a customs declaration, and that's because the UK has left the EU customs union, and effectively there's now an international border between the countries of the EU and Great Britain. Okay, so any goods moving across an international border requires customs formalities to be undertaken. So most companies who traded with the EU prior to January are used to submitting Intrastat declarations, and Intrastat was mandatory for goods traded over a certain threshold, and it's statistical reporting to allow the European Union to know which goods are moving amongst member states. So in effect, goods being shipped from Great Britain to the EU were previously reported as Intrastat dispatches, but now require an export declaration, and goods being shipped from the EU previously reported on Intrastat arrivals now need an import declaration. Okay, but bear in mind that Intrastat arrivals are still mandatory until the end of the year. So it's important to note that even if the goods qualify for preferential origin under the EU and UK Trade and Cooperation Agreement, this does not remove the need for a customs declaration. Now, prior to this year, UK businesses applied the EU custom legislation, which is known as the Union Customs Code, or UCC, but that law no longer applies in Great Britain, and the UK government have implemented their own internal customs legislation, and most of that can be found on gov.uk. Okay. So there's very specific rules around trading with Northern Ireland due to the desire to prevent a hard border in the island of Ireland, and this means that import declarations are required for goods that move from Great Britain to Northern Ireland, and duties payable on those goods if they're at risk of moving to the EU. Okay. Now, customs declarations are only required in a limited number of circumstances when goods move from Northern Ireland to Great Britain. Okay, so for example, goods that are in duty suspension or not where the duty has not been paid, a customs declaration would be required. Goods moving between Northern Ireland and the EU takes place unaffected, so there are no customs declarations for goods entering Northern Ireland directly from the EU and vice versa. Businesses in Northern Ireland continue to use UK free trade agreements, and the Trader Support Service is a free-to-use service that will help traders who move goods from Northern Ireland to Great Britain. And they also have implemented the Northern Ireland Customs and Trade Academy, which offers training courses for individuals who move goods between Great Britain and Northern Ireland. Okay, so there's been quite some changes to UK customs legislation. So in preparation for leaving the EU, the UK's unit overseeing the plans for the UK border, called the Border and Protocol Delivery Group, released the UK's border operating model. So this is a guide on how the border between DB and EU works now that the transition period is over, and traders and hauliers must take the steps outlined in the model to move their goods. So changes are required now to allow for the fact that the UK is so close geographically to the EU, and traditional import and export processes rely on that transport time to allow declarations to be completed. So the border operating model implements import controls in a staged manner. So from the 1st of January, all controlled goods require import declarations at the point of arrival. From April, traders importing products of animal origin or regulated plant products need to submit pre-notifications and health documentation. And the UK border operating model announced that there was an optional easement available for traders in Great Britain buying standard goods from the EU. So the declarations can be deferred for a rolling 6-month period, but it's important to remember that that easement does not remove the need for an import declaration, but rather delays the timing for the declaration to be made, and it will cease to be available from the 1st of July. Okay, so there's also the choice for ports to choose which model they want to operate, and those choices are between the temporary storage model, which requires the port operator to implement an inventory control system, or another option of the pre-lodgement model, which is a choice more common for channel-facing ports, where the customs declaration is pre-lodged before the goods board in the EU. Okay, and that also requires a goods movement reference number. And a few notes on the UK's borders operating model. So export declarations are mandatory from the 1st of January. The border operating model does not apply in Northern Ireland, and the EU have implemented full import and export controls on goods moving between Great Britain and the EU. Okay, so there's no choice for EU traders to defer or delay declarations. And now we'll mention the UK global tariff and the implications on the customs declaration process. So being part of the EU customs union previously, the UK was bound to apply the EU's tariff schedule called the Common External Tariff. But now that the UK is no longer part of the EU customs union, the UK has implemented its own independent tariff schedule, and that's called the UK global tariff. So that UK global tariff applies unless there's a free trade agreement, and of course the goods meet the conditions under that agreement, or if the goods are coming from a developing country under the UK Generalised Scheme of Preferences. It also applies unless there's an exception like a tariff suspension, for example, on COVID-19 goods like oxygen. And businesses in Northern Ireland buying goods from third countries can apply the UK global tariff unless the goods are at risk of moving to the EU. So the import tariffs for goods moving into Great Britain are now different from they were last year. So they've been simplified, reduced, or eliminated. So it's really important that businesses check the UK global tariff to understand what duty would be payable on their goods when they move them from the EU into Great Britain. And the UK have implemented the ability for businesses to apply for guarantee waivers. So previously, prior to this year, waivers were only available to businesses who were authorised economic operator accredited. And those waivers are now available for entities who have a duty deferment account, which allows deferral of duty payment, or when an operator has a special procedure like inward processing. So the UK now allow more businesses to apply for a waiver than before, and there is specific guidance on that on the government website. So there's now a new option available from a VAT perspective called postponed VAT accounting. It's a new simplification, and it allows the importer to pay or postpone VAT at the time the import declaration is completed. And lastly, HMRC intend on changing the system in which customs declarations are submitted. So the current system is called Chief, and it's being replaced by a new system called the Customs Declaration Service, or CDS. Normally, a broker or business choosing to complete their own declarations would identify an independent software company, and they would supply software to allow customs declarations to be completed, and that software would interface with HMRC systems. And there is a list of software providers on gov.uk. Just to note that for goods moving into Northern Ireland from Great Britain, CDS is mandatory rather than chief, and the Trader Support Service does have software that can interface with CDS. So quite a lot of information on that. Back to you now, Will, for the poll, please.
Thanks, Amy. So if we could launch the second poll, this is just asking just generally how confident you are trading with the EU post-transition with all the new rules which have come into effect. It'd be interesting to see if this response mirrors that of the first poll. Anyway, I think Paul's going to come in to answer a couple of questions just while Amy takes a breather. So thank you everyone for the questions so far. Lots have come through. The first one I'm going to ask is from Angela. And we don't typically ask kind of company-specific ones, but this one is quite interesting. So Angela's company imports raw materials of cloth and yarn to the UK for manufacturing in the UK and then for distribution into UK, EU and US. What are the requirements for us in terms of things like customs and duty?
Thank you, Will. So yeah, in regard to his question, it is very interesting. So as Amy has rightly said that when the goods enter the UK, there is a requirement to complete an import declaration. And obviously there's potential elements there where you have to pay duty depending on the commodity code for the cloth. Interesting when Amy mentioned before about the importance of understanding your commodity code, because once that is validated and understood on the UK Global Tariff Tool, it will also give you information for import and export restrictions and what potentially other licensing authorizations might be required to complete any import or export formalities. The Incoterms also is a very key element within determining the responsibility of the buyer or the seller relationship. It doesn't just determine who does customs formalities, whether they're the importing or the exporting, but also covers elements like risk, insurance. So, and also if in this case, there is an element here where we're looking at manufacturing in the UK. So there are options available through CFSP, which is Customs Freight Simplified Procedures, which can assist you in, how you operate goods which do have a further manufacturing process. So if you choose to obviously use an inward processing operating model, you could actually suspend the import duty, and when you bring the goods into the UK, then if you export the final product to the EU or US, you could get full relief from the import duty, which was additionally required. IOE does offer consultancy and can take businesses through the application for special procedures. And obviously, if that's of interest to any participants on the call, then please visit our website for further details.
Thanks, Paul. If we quickly close that poll, that's really interesting. So it's actually interesting as well because we will be covering some of the special procedures later in the webinar, but also in a introductory webinar next week. Obviously not to the same level of depth and in a bespoke way to your company as you'd get in a consultancy or training, but it will hopefully give an idea of a further idea of what all this means for those of you who are new to these concepts. Anyway, back to the poll, and unsurprisingly, I suppose, the results do mirror to some extent the first poll. So again, just over a third of you this time in the middle, but slightly fewer of you are feeling pessimistic about confidence with trade with the EU. So that's about just under 40%, and over a quarter of you are feeling more confident. So any surprises there, Amy? It kind of mirrors the first poll to some extent.
Absolutely, yeah, it does. It sounds as though the two polls are kind of related there in terms of the response. So it's good to hear though that there are quite a few people who feel more confident. That's a good sign.
Great, thanks, Amy, and thanks, Paul, as well. If we hide the poll, and we can kick on with the rest.
Thank you. So we'll look at the preparation steps and getting started completing declarations. So firstly, whether you need to declare goods to UK customs, again, it depends on where in the UK they start or end their journey, and it's important to check that first. And as Paul said, the buyer and the seller need to agree Incoterms, as this will determine who will take responsibility for the physical movement and the customs formalities. Okay. Next, traders need to obtain an EORI number. So if they are responsible for completing import and export declarations, they need to have an EORI number, as that's a prerequisite for a customs declaration. So the party responsible for the EU export or import needs to have an EU EORI number, and the party responsible for the GB customs procedures needs to have a GB EORI number. And it's really important to note that failure to obtain an EORI can result in increased costs and delays for traders. Next, validate that your supply chain partner is ready to export or import goods. So if your supplier is in the EU and they're responsible for exporting from the EU, have they taken the necessary steps? If your customer in the EU is responsible for importing the goods from you, are they ready? Have they got an EORI number? And have they identified a broker? So this step has the ability to stop supply chain if your partners are not prepared. Decide how you will make your declaration. You can do this yourself in-house. Normally you need a system and you need obviously personnel to do that for your business, or you can identify a broker to make the declarations on your behalf. And you'll also want to consider whether you'll place the goods into free circulation and pay duty, or whether you want to look at operating a customs special procedure like inward processing, which will help businesses pay less duty depending on the model and where the goods will end up. Classify goods. In other words, assign a commodity code to the parts that will move across the border. This is really important as it will determine the duty and whether import and export licenses and other measures are required. And it will also determine whether goods meet the rules of origin, so it's really important. Ensure you have the correct value of goods, and there is a prescribed process in UK guidance for arriving at the customs value for your goods, and I will go into that detail in the next few slides. And you may need to get licenses or certificates if you're importing goods that are controlled, prohibited or restricted. And some examples might include drugs, chemicals or weapons. It's really important to check that as well. And then lastly, check the marking, labelling and marketing standards for your goods, because the UK has issued guidance, and we will share a link to that following the webinar. So we'll look on to see some of these elements in more detail. So the importance of agreeing Incoterms. So this slide shows the purpose of an Incoterm, and again just reiterates the importance of the buyer and the seller agreeing the terms of trade through an Incoterm. Incoterms need to be agreed in advance, because that will determine who organises for transport and insurance, and who obtains shipping documents and import or export licenses. Okay. And that will determine which party needs to take responsibility for the customs clearance. So, and in order to do that, they need to have an EORI number, they need to have a broker, and they need to pay import duty and VAT. Okay. And the Incoterms also determine risk, so where and when the goods move from ownership of the seller to ownership of the buyer. And this means that the risk for the goods moves from the seller to the buyer at a specific point in the process. After this point, the buyer holds responsibility for the safe movement of goods. So it would be best practice to include a named place for the risk to pass. So instead of quoting, for example, FCA in the contract, there should be a named place such as FCA seller's premises. And that just means that there will be no ambiguity around where the risk passes from the seller to the buyer. And lastly, the Incoterm determines the cost for all of the additional elements in the journey, the transportation, insurance, packaging, unloading and loading of the goods. So it's important that both the buyer and the seller understand their responsibilities, and that will allow continuous movement of goods within the supply chain. So this slide shows at a high level the different elements within the customs clearance and physical transport of goods from the buyer to the seller. And the solid red dots will show the transfer of risk. Okay, so if we look at the Ex Works Incoterm first, Ex Works means that the seller makes the goods available at their premises and the buyer arranges for everything else, so the transport, insurance and the customs clearance. So if we take an example of goods moving from Spain to England, the DB buyer needs to obtain an EU EORI number to make the EU export declaration in Spain. Okay, and that comes with an element of risk. Really important that the parties agreeing to these Incoterms understand that. Okay, so without going through the rest of the detail, you'll see all 11 Incoterms will appear on the screen, and the solid red dot shows where the risk transfers from the seller to the buyer. And if we look at the DDP Incoterm, the last one on the screen, this means that the seller is responsible for most of the actions until the goods are delivered at the buyer's premises. So things like transport and, importantly, import clearance. So if we look again at the example of goods moving from Spain to England, the EU seller needs to make a complete import, to complete an import formality in Great Britain, and would need to register for a GB EORI number and find a customs broker in Great Britain. Okay, so again, that comes with some risk from the seller's perspective, selling in DDP terms. Okay. So customs brokers and agents, they are there to facilitate the customs clearance procedures. Okay, so the customs declaration can be made by a trader if they have the systems and expertise, or it can be done by a third party. Okay, and it's important that the trader understands the capacity in which a customs broker is acting. So there's two types of representation. Direct representation is where the customs broker acts on behalf of the trader, but the trader is solely liable for the customs debt. Okay, or there's indirect representation, and that's where the customs broker acts in their own name but on behalf of the trader, and in that scenario the broker is jointly liable for the debt. So it's really important when you find a broker, you ask a customs broker to act on your behalf, that you understand in what capacity they will act. Okay. And so we've already mentioned this a couple of times, controlled, prohibited and restricted goods. So some examples have been listed of products which are subject to additional processes. Import and export licenses need to be obtained by the importer or the exporter. So for example, businesses buying agri-food, like products of animal origin in the EU, need to adhere to regulatory requirements like the pre-notification on the UK's IPAF system, so that an inspection can be completed on the goods on arrival, and they also need to have an export health certificate that's signed by an official vet. So those requirements are listed in the border operating model, and there is a waiver in place for imports of those types of goods, and that will come to an end at the end of March. So it's really important that traders moving those types of goods understand what the full requirements will be. Oops. So I think we have another poll at this point. Well.
Yeah, thanks, Aimee. So if we launch the next poll, we're actually following on from a couple of slides back. We're going to ask you, how do you currently submit customs declarations? The options there include directly myself, using an intermediary, other, or I do not currently submit declarations. So that would be an interesting one. Once again, while you're answering that poll, we've had a question. A few people have been asking about the IT sort of systems for which declarations are asked. So Martin has asked, I import and export goods in the UK. What HMR system do I need to interface with?
Okay, thank you, Will. Yeah, I'll take that one if that's okay. So thank you again, Martin, for the question. The UK's legacy system, as Aimee's already mentioned, for doing customs declarations is called Chief, and will eventually be replaced by the new system called Customs Declaration Service, CDS. It's really important, obviously, again, referring back to what Aimee said in regard to the Incoterms here, because that the Incoterms used will define buyer or seller responsibility for customs formalities. So, for example, if importing and exporting in GB mainland, you can continue to use Chief for the time being, but businesses importing into Northern Ireland from Great Britain or into EU will need to use the CDS to complete import declarations. Now, if we take that in conjunction with Incoterms, if you were using terms as Aimee stated of delivered duty paid, DDP, you'd use Chief to export from the UK, but then when it arrived, let's say in Germany, you would be responsible to enter the import declaration and any licenses within the CDS system. Now, this could create extra challenges for traders, and maybe there'd be a need to appoint an agent within that country to complete those formalities. Else you could be looking to having, in the interim stage, a setup with Chief for the export and also a setup with CDS for the import into the EU. So it's really important, again, we can't emphasize the importance enough of the Incoterms with these responsibilities and potentially the risk associated with having to integrate with different systems, that being HMRC and maybe with the European Union as well to facilitate such trade movements. Thank you, Will.
Thanks, Paul. Hopefully that's answered a few people's questions. So if we close that poll quickly and just show the response. So I guess this isn't too surprising. Over half of you are using customs intermediaries. 22% aren't currently submitting declarations, 14% doing it yourselves, and 7% other. Any surprises there, Aimee? We'd expect quite a lot to be using intermediaries, presumably.
Yeah, I actually am quite surprised at the level of people in attendance who are completing their own declarations, to be honest. Well, because that does require quite a lot of expertise and obviously systems to interface with HMRC. So that number's actually quite high. That's encouraging to see. Yep.
That's interesting. I suppose the Institute and kind of the Open to Export on UK Customs Academy is a captive audience for traders generally, so that's probably would explain partly that, but interesting nonetheless. Thanks everyone for answering that poll, and if we go on to the next slide, please. Thank you.
Okay. So we'll now come on to look at what information is needed to make a customs declaration. This list is by no means exhaustive, but it gives an idea of the key things that an importer and exporter need to do. Okay, so firstly, an EORI number. Secondly, importers and exporters will need to have commercial invoices and other paperwork like transport documentation and to back up that customs declaration. Okay, and we've already mentioned it numerous times. Traders need to agree the terms of delivery through the Incoterm. Importers will need a deferment account so that they can pay for import duty without having to pay for that each and every time there's a goods movement. And traders moving certain products need to submit pre-notifications and health documentation. And then if we look at the data elements that are needed on a customs declaration, the country of origin, customs value, customs procedure codes, commodity codes and weights. So that for the traders who are legally responsible for completing the declaration, they need to make sure that the data that is being declared is accurate, okay? So if we look at the commodity codes in more detail, they are needed for goods moving across international borders, and they should be used or they should be identified before the goods actually move. Now the commodity codes determine the value of duty and VAT, additional measures like anti-dumping duty and import and export licensing requirements, and they also determine whether goods can meet the rules of origin, okay? So it would be advisable to have a process in place where the commodity codes are assigned by someone in the business who has the expertise and has access to the information about the parts, things like the essential characteristics and the technical specification. And the person who is assigning the commodity code needs to consider the general rules for interpretation and read the chapter and heading notes. Okay, and again, just to reiterate, it's the responsibility of the importer or the exporter to obtain the correct commodity code, and they will be held liable for the accuracy or accountable for the accuracy. So there's a risk involved when you use a commodity code provided by someone else, like your supplier or your customer. So ensure there's a clear instruction to the customs broker on which commodity code to use so that it's not taken from paperwork. Origin, another important element, and origin is the economic nationality of the goods, and there's two concepts for origin, and depending on what the origin will be used for, there are different ways of arriving at the origin. So non-preferential origin is used for the purposes of applying trade remedy measures like anti-dumping duty, and in addition to the commodity code, will determine the duty rate applicable to the goods. So it's normally the origin that would be included on the commercial invoice from the supplier. And the UK has just released very specific rules to determine non-preferential origin of goods, and these are based on a set of rules by product or by tariff code. Preferential origin is different, and it only applies when calculating whether goods meet rules of origin under a specific free trade agreement, or for goods coming from one of the developing countries under the UK's generalised scheme of preferences. Under the UK and EU Trade and Cooperation Agreement, there are specific rules for each product, and the manufacturer, the producer of the product, is probably the best placed party to decide whether the goods meet the rules of origin and obviously the other conditions within the trade agreement. And it's advisable that businesses understand the rules of origin and any conditions before they issue statements of origin or certificates. And just to touch on valuation, it's not just as simple as including the value of goods as supplied from your supplier. There is a prescribed process for importers to follow to arrive at the correct customs value. So method 1 should be considered first, and if that's not appropriate, move to method 2 and so on, and we'll run through them now. So method 1 is the transaction value, in other words, the price paid or payable for the goods. Method 2, would be used if that is not available. So for example, free of charge goods, then you should consider the value if you were buying identical goods. If that's not available, similar goods. And if that's not available, what would the selling price be in the UK if those goods were sold? And if that's not available, what would the cost of producing those goods be? And lastly, the fallback method. So if methods 1 to 5 are not appropriate, and that really is where you arrive at the customs value using reasonable means consistent with the World Trade Organization valuation principles. So it's important that delivery costs, packing costs, royalties and commission, costs for tooling, containers and packing costs should be included, even if those are invoiced and paid for separately. Okay, so there is a notice, HMRC notice 252, and that really gives a full list of what charges should be included and what charges should be omitted. So you can see it's really important that traders importing goods need to make sure that the customs value includes all of these additional charges. Okay, so the payment of duty and VAT is the responsibility of the importer of record, and to avoid having to make a duty payment at the time each time goods move, there is a duty deferment account, or DDA, and that allows deferment until the 15th of the month. In the past, DDAs required a financial guarantee, but this can now be waived for most businesses who are established in the UK and have a good compliance record. Okay. And then there's now the option of postponed VAT accounting, and it allows the importer to pay or postpone VAT at the time the import declaration is made. And the benefit is that the VAT is declared and recovered on the same VAT return, so rather than having to pay VAT and then reclaim it. So that means that the goods are released without payment of VAT, and that's obviously a cash flow improvement for businesses. Okay. The customs procedure code, so it's a really important element. It's a 7-digit code, and it indicates to HMRC on the chief system how goods will be imported or exported. So for example, you can see on the screen the import code to release goods to free circulation, 4 and all the zeros. And for example, the export CPC, releasing goods to free circulation or exporting goods that are in free circulation, 10000001. So there are CPCs to be used, different CPC codes to be used when claiming preferential origin on import or exporting under preferential origin, and there are specific CPCs to be used when using special procedures like inward processing. So CPCs are included in the UK trade tariff, and please consult that if you are planning to use any of the CPCs, as that will include uses, limitations, and other information that's really important to consider. HMRC require importers and exporters to keep records for goods declared for 4 years, so you need to have a robust system, okay? And there's a management support system data, or MSS, which shows imports and exports collected on the HMRC chief system, and that can be ordered by businesses on a monthly basis, and obviously HMRC charge for that. But it's best practice to check that on a monthly basis, because that shows you all of the transactions that have been completed under your EORI number, and it allows you to follow up to make sure that you have the supporting paperwork and an audit trail for all of those transactions. And it's the responsibility of the importer or exporter to maintain the paperwork. So we've already talked about this: the commercial invoice, packing lists, origin certificates if applicable, transport documents like bills of lading, CMRs, airway bills, product regulatory certificates like export health certificates, copies of the customs declarations, okay? So whether using a broker, and we'll just come on now to look at checks and errors, whether using a broker or completing the declarations in-house, declarations should be checked, okay? And that's to ensure that they're correct. So when a broker completes your declaration, you need to check the information that's been keyed. So in most situations, the importer or the exporter will be held responsible for the accuracy. So HMRC does recognise that errors happen, but they look favourably on businesses who correct errors and implement remedial action, things like implementing more checks on declarations to try and catch the errors in future, okay? And then there are amendment form. So if there's errors that are found, there are different forms to be completed, and it really depends on the type of error and whether there's been an overpayment or underpayment of duty, and whether the declaration was made on chief or CDS. So on import, if an error has occurred resulting in an overpayment of duty, there's a C285 form, and that will be allowed, that will allow that duty to be reclaimed. And if there's been an error on import resulting in a duty being underpaid, there's the C2001 form, and that will trigger the payment for the underpaid duty to HMRC. The incorrect duty payment can be made if there's an incorrect CPC or a value declared, so it can happen quite easily. And there's also the ability to make a non-monetary amendment form if there has been no duty over or under payment, so just for statistical purposes, and that's called the CFSP non-monetary amendment. And then for export purposes, there doesn't tend to be monetary impact, but there is a statistical amendment form to be completed, and those amendments will never show on the MSS data. Okay, it's just important to note that. But there is guidance on Gov, and we have included links to these forms that you'll receive following the webinar today. Okay, and we'll come to the last sections. I'm just conscious of time. I want to make sure there's enough time left at the end for questions. And back to you, Will, for the poll.
Yes, one last poll. So I was just going to ask you, do you use any of the following special procedures or authorizations at the moment? The options there are AEO, customs warehousing, customs freight, I think it's supposed to be freight simplified procedures, that's my bad, inward or outward processing, or other. Paul, do you want to just quickly speak through what each of these means?
Yes, sure, Will. Thank you for that. Yes, so AEO is authorised economic operator. That is also security and customs simplification. So in this respect, you are holding up to an additional standard, which is recognised. There is mutual agreements for AEO standards with other programs around the world. So you could have CT Pact in the USA, obviously AEO in Europe as well. Customs warehousing is where you can hold goods under a duty suspension, so they're not actually in free circulation for onward supply. Customs freight simplified procedures is obviously ability there where you can have faster lanes into moving your goods across borders. There are less data requirements and also the option for delayed supplementary declarations after the goods have arrived. Inward and outward processing relief. So in regard to these, obviously we mentioned inward processing relief with the yarn example earlier. So that is if you are bringing components, materials or products into GB, whereby then you are doing some substantial manufacturing change. That can be used to, compensate for dispensation of duty. So it could be completely not needed if it's exported back outside of the UK, or the relevant duty applied when you pull it into free circulation. Outward processing relief is relating usually to repair return items, where you can obviously have a duty suspension there and VAT deferment.
Thanks, Paul. Really good succinct summary of all of those there, and we'll hopefully be covering these in more depth next week. I say hopefully, we will be in our next webinar on Tuesday. If we can close that poll now and share the results. So, that's an interesting split. So the majority, well, not majority, but 33%, a third of you are using inward or outward processing. 26% of you using customs freight simplified procedures. 24% AEO, again, that's quite high. 17% customs warehousing, and a fair few of you are using other procedures as well. And there's a fair few which are out there. Any surprises there, Aimee?
No, not particularly. I think on the CFSP usage, that could be higher, so 26%. CFSP we'll talk about in the next couple of slides, but there are benefits for importers in the UK to using CFSP, and so I did think that figure might be a bit higher.
Interesting, really interesting. Okay, well, if we close that poll, thank you everyone for answering that poll, and yeah, let's kick on with the rest of the presentation.
Okay, thank you. Well, so we'll look at as we've talked about already, the CFSP procedure, and there's different options available to complete the import declarations. Now, CFSP holds benefits for importers because it allows the goods to be imported without having to declare all of the information about the goods up front or on arrival of the goods. So there are two options under the CFSP procedures. One is SDP, or Simplified Declaration Procedure, which involves submission of a simplified frontier declaration, and that is then followed by a supplementary declaration by the 4th working day of the following month. And the other option is EIDR, entry into declarant records, where the trader or their broker makes an entry in their records, and that is then followed by a supplementary declaration. Now, the EIDR procedure can't be used for controlled goods, and there is a list of those obviously on Gov. Okay, so reiterate, CFSP does offer a lot of benefit for businesses in Great Britain because it allows for quicker clearance of goods. So the other alternative is the full frontier declaration procedure. So it's not a simplification, it's a default procedure which is used for imports in the absence of a CFSP authorization. Now, it involves submission of all of the data elements about the goods in advance or on entry of the goods into the UK. Now, it can take longer to complete because obviously there's more information, more data, and it can be more expensive than a simplified declaration, simplified frontier declaration. So it's worth comparing the two procedures. If you're using full declaration procedure, ask your broker, what would it take to use the CFSP process? Would it be cheaper, and what would you need to do? And then on the export side, there are different simplifications available for completion of export declarations. So we have the simplified declaration procedure. It's again a two-part procedure. The first part is the submission of pre-shipment advice, with the basic details about the consignment, and that's followed by the supplementary declaration within 14 days of departure of the goods. Next, we have customs supervised exports, or CSE. So that allows goods to be cleared for export at the trader's premises rather than at the port, and that can be really beneficial. Designated export place is where, or DEP, is where consignments can be consolidated and presented to customs inland away from the border, and that's usually used by carriers who are carrying, for example, groupage loads. So it allows them to consolidate the goods and have them cleared before the goods reach the border. And lastly, we have entry into declarant records, or EIDR. So that's where the goods are declared for export, again at the trader's premises using the trader's records. Now, all 4 of these are simplifications and they require prior authorization from HMRC, and of course the Institute can help with any of those application processes. So the next 2 slides are just useful links for businesses. So we've included import and export declaration requirements, how to apply for an EORI, the border operating model, finding your commodity codes, valuing your goods, as we've talked about, preferential rules and non-preferential rules of origin, VAT, archiving your trade documents, and then finding a broker or a software provider if you want to complete declarations yourself, and links to those amendment forms. Okay, so you will receive this pack following today's webinar with the links included. With that brings me to the end. So can I pass back to you, Will, please?
Thanks, Aimee. And yeah, as Aimee just noted, we will be sending the pack with the links. So please do keep an eye out in your inbox for those. But fantastic presentation, Aimee. Really great, comprehensive to what is a real specialist area, completing declarations. So hopefully that's given people enough of an insight to what's needed and kind of some of those next steps you can complete to start the process of doing it. Just a quick, before we go on to questions, just a quick mention of the IUE training and support. We have a load of training courses and consultancy offerings around completing customs declarations, which is definitely worth considering if you are completing them yourselves or kind of uncertain about what your obligations are. And these do range from different levels of expertise. So we've got introduction courses, we've got step-by-step guides to actually completing declarations yourselves, advanced courses, and a whole range of available support which you can tap into. So please do check out the website export.org.uk afterwards to find out more information. But as noted, if we go to the next slide, it's time to just ask a couple more of your questions. We've done a few already through the polls, but we've got time for a few more now. So a question we've had in from, just trying to find it, Zanetta, who's asked, please could you advise what we, the importer, would need to do to set our business up for completing declarations in-house rather than by using a third party? So to kick things off, how about over to you again, Paul?
Okay, yes, that's a great question there. So this is really, firstly, you should be trying to advise and identify a software provider, because this is going to be critical for the customs process. So identify who's out there which could supply customs declaration software. Also comes in with that is other badge IDs and reference authorizations with HMRC, or maybe CDS if you've got a responsibility to import into the European Union as well. So that's what you should be understanding first there. There are a list of these on the Gov pages. Secondly, it's best to decide who will complete the import declaration. So again, look at those Incoterms, where my responsibilities lie in. Have I got the actual resource to do these extra functions, or do I need to outsource them, like to a customs intermediary, which could be really helpful in that? And also, if you will be completing import declarations, have you assessed whether simplified procedures might be beneficial for you? I mean, Aimee spoke greatly on the options which are available, but there's also, if you look at the border operating model, if you use EIDR, so into your own commercial records, nothing initially declared to customs, there actually is a delay until the 1st of July this year through the border operating model, where you don't have to do your supplementary declarations until then. So potentially using that model, you could be doing exports, but you wouldn't have to obviously pay any levies on that and do a supplementary declaration 6 months down the line. And there's also, implementation maybe of in-house declaration. So if you're willing to take on the cost, the IT, the interfaces, and you've got a bigger team which can deal with that, then maybe that's the way you go, whereby paying more upfront, but then you don't have that ongoing cost with, customs agents, which will be doing it on your behalf. And it also allows you to take ownership of that. And it's whether that is something that you want to do as a business or outsourcing is the best option. But also, like we said during Aimee's fantastic presentation today, then the IOE are here to help guide businesses. So please reach out, like Will also mentioned, in regard to services we offer if you need guidance, because nothing regarding customs should be jumped into without the right checks being done to see, actually, is it beneficial to me? Is that the right way we want to operate?
Thanks, Paul. Really good answer, and hopefully that's helped. Question in from actually a few people have asked around a section around checks and errors. So Harry's asked, how do I fix an error on a declaration? And we also had a question in from Seamus, who asked whether Aimee could repeat the process of how we get the details of the customs declaration made on our behalf into Chief. So Aimee, do you want to take that one? Just a recap
Sure.
on fixing errors.
Yeah, so it's actually a great question. So declarations can be amended up until they've been arrived or accepted by HMRC. So after that, it's not possible to make an amendment to a declaration electronically. So that's where, depending on the type of error or the type of declaration or on what system's been used, there are different forms to be completed and sent to customs. Okay, and that covers how to make an amendment to a declaration. In terms of how to order that data, so it's called management support system data, or if you input that into Google, I've included a link to it as well. You can order that data from HMRC, and obviously you pay for it, but they send it to you on a monthly basis, and that shows you all of the declaration information that's been keyed under your EORI number. So it's a really, really valuable tool. It shows you all of the information, customs liability, commodity codes, waste, everything. So it's a really good tool for a business to have. I would definitely recommend it.
Good stuff. Good stuff. We'll do a couple more questions. We're starting one thing on time. So I'll do this one for Paul. Obviously, we made a big point about Incoterms during the webinar, so it's a couple of questions on the clarifying which Incoterms to use and when. Anne Valerie's asked, on which Incoterm does an exporter need to obtain the licenses or declarations? And another question from Joe is asking, just to double check, if we decide to use DDP terms for our exports, do we need an EORI number in each destination country?
Okay, yes, so thank you for that, Will, and thank you for the questions as well. So yeah, EORI number is needed. EORI number is actually what you need to facilitate any import or exports. They also allow you to obtain any such customs rulings like an advance ruling on origin or tariff classification, commodity code you're going to use. So they would be needed. So yeah, if you have DDP terms delivered duty paid, you are the responsible party. Then if you're not going through an agent, because the agent could have an EU EORI number to complete those actions for you, but if not, then you would need one yourself, and that is very element there. So Podden, well, can I have the first part of that question again, please, just so.
Oh, I've just lost the first part of that question. It was, I think it was, which Incoterm should I use?
Yeah, when
Sorry.
would you need? Yeah, the export, which Incoterms determine when the exporter needs to have the export licenses in place?
Yes.
Okay, the exporter. Okay, here. Okay, so we've worked through elements there. So an exporter is going to be termed by the buyer or seller relationship. So if we looked at the ex works again, then actually the buyer is actually going to have all those in place before they export. So you're collecting from a known premises, could be the seller's warehouse. So before you go to collect those goods, you need to have all those formalities. And looking at where the relationship is now with the EU, as we're a third country, then there may be registrations, authorisations needed in the EU or that member state in order to facilitate the export. And under Ex Works, you would be responsible to do that. If we looked at other ones like DDP, that all falls on the seller. Yeah, and I think the chart is really brilliant, which was shown today in regard to those risks and where it hands over of whose responsibility, because from that you can look at that. There are an element though of those Incoterms which are based on maritime. You'll see them like FAS, which is free alongside ship, FOB, free on board, which is directly related to maritime. So it's important to understand all 11 terms, because dependent on how you're going to move the goods, whether it's, a lengthier distribution model which goes via sea for longer lead times, or maybe air freight, which would be quicker, or road haulage to get it from point A to B, all 11 terms need to be assessed. And also the key bit to element there is to understand what the delivery aspect means within it, because each Incoterm says, well, this is when delivery takes place. So for Ex Works, that's when you've collected it from the seller's premises. When it's DDP, it's when you've delivered it after import clearance. So it's key to understand those key determinations which are specified within the Incoterms. And obviously the most recent update, which was in 2020. Please note that these get updated every 10 years. So the next one will be in 2030.
Excellent, thanks, Paul. Very good answer. I think we need to revisit Incoterms again at some point this year, as we've not done it since the 2020 rules came out, or were about to come out a couple of years ago. So yeah, it's a lot to delve into there. But thank you everyone for the questions. There's absolutely loads more we could have gone through today, but we have run out of time. So if we move on to the next slide. Just a reminder, if we didn't get to your question today, you can contact us on our technical helpline. And yeah, we can also got various other offerings, including our training, our consultancy packages, and so on, to help you with unanswered questions. There's also our lunchtime learnings, where we go into some of the different topics around international trade and the Brexit deal in a little bit more depth. So please do consider all of our support which is available there. But thank you once again to Aimee for a fantastic presentation, a really good comprehensive overview of competing declarations, as far as you can go within an hour, of course. And thank you, Paul, as well, for supporting with the Q&A at the end there as well. But thank you everyone for tuning in. Please do visit export.org.uk for more information about our support. But for now, we are back next Tuesday with a webinar on customs authorizations, so hopefully see you there. Thanks everyone, goodbye.
Thanks, Will. Bye.